welcome to the business insurance workshop today. My name is Vernetta Mitchell with TRS&I Group, and we have many of our other team members on the call today as well. But we are primarily going to focus on walking you through the importance of insurance, the types of insurance, how to understand the insurance you may need for your particular business. The agenda today will be, we have a few slides that we'll go through to introduce you to the bond program. If you have not heard why we're doing this and how we're engaged with that bond, Will Gaddy is going to walk you through that. Then after that, I'm going to do a brief introduction of our guest speaker today, Mr. Vin Fotheringham. I have to practice saying that, but he is going to take you through and update you and inform you on the different types of business insurance there is. And will also walk us through the housekeeping, how to ask questions, etc. We hope that this is a very interactive workshop today. So you can raise your hand if you know how to use the reaction buttons, or you can put your questions in the chat, and then we will address those as we go. So Will, you want to take it from here?
There we go. Thank you, Vernetta, and thank you all for joining. My name is Will Gaddy with the TRS&I Group, and what are we here for? We're here about for business development for the Guilford County Schools bond program. The 2022 school bond provides funding for critical infrastructure needs and that were identified in the Master Facilities Plan. These needs include building, rebuilding, and fully renovating schools across Guilford County. The bond is also aims to provide safety and technology upgrades to Guilford County schools. We've put together a series of business development workshops that we believe will help position local, small, minority, and women-owned businesses get prepared to collaborate on the 2022 bond projects. And for more information about these particular projects and opportunities for you to bid, please visit the website here, gcsnc.com. And you'll see the 2022 bond projects. All right, and
I will put that website in the chat as well, so you can have it with you. Okay.
Got it. All right, and I'm going to go ahead and turn it over to Vincent.
Yep. So I'm going to do a brief introduction very quick. So, and then you can start pulling up your slides. So I want to introduce Mr. Vin Fotheringham. Vin is the Chief Executive Officer at Partners Risk Strategies, a risk consulting and insurance brokerage firm with offices in Charlotte, Atlanta, and Sarasota, Florida. As a CEO, Vin sets strategies, drive culture, and manage risk for the company's portfolio of clients. Vin has more than 30 years of corporate risk management and senior leadership experience. Prior to becoming the CEO of Partners Risk Strategies, Vin served as the Chief Insurance Officer at Amazon in Arlington, Virginia, where he led the global risk management and claims organization with an operating budget of $2.5 billion and nearly 300 employees. Business verticals include corporate insurance, claims, third-party programs, program management, compliance, captive operations, which include Day One Insurance, one of the largest captive insurance companies in the world with over $3 billion in annual gross premium. Vince is active in presenting at major industry conferences to include the annual RIMS Risk World Conferences, Workers' Compensation Institute Conference, International Association of Venue Managers, as well as other insurance companies and professional networks on the topics of risk management, cyber risk, DEI, and supplier diversity. He was also featured in Risk and Insurance magazine several times for his approach in using data analytics to impact the overall cost of risk, and was named as one of the magazine's Risk All-Stars in 2020. In 2022, he was named the top 50 multicultural leaders by the Tech Inclusion Council. You've been busy, Vince. Been very busy. And so without further ado, we want to turn it over to Mr. Vin Fordingham.
Thank you, Vernetta. Thank you so much, and really appreciate the opportunity to present to the group today. As Vernetta says, I'm Vin Fordingham. I am the CEO at Partners Risk Strategies. I started with Partners just in June of this year. So, Partners is new to me, but as we are making our way through, we are working on expanding our scope and scaling our business. Partners is a risk management consulting and brokerage firm based in Charlotte with offices in Atlanta and Sarasota, and we are a certified minority business entity. So a great opportunity to present to all of you today. We especially want to thank Vernetta, Bonnie, Rochelle, and Will, and everybody at TRSI Group for the opportunity today. And what I also want to make sure we do is to, one second, I want to make sure I am. Can everybody see my screen? Is the screen good?
Yes, we can.
Okay, great. I want to introduce a couple of my colleagues to you. The first one is Michael Dean Perry. He's one of our partners here and a producer at Partners Risk Strategies. And also Harper Davis, who is one of our client managers here. So they are on the call today, and they virtually wave at all of you to say hello. We talked about partners, but certainly our mission here is we deliver comprehensive solutions that make a positive difference for our clients and our communities. And so as we continue to do that and focusing on you and your needs, we want to make sure that we're well positioned to assist you as well. So we'll get into the agenda for today. We're really talking about insurance basics. I know insurance can be a very confusing subject for a lot of people. And so by providing you with some basics today about some corporate insurance types, hopefully we'll give you a better understanding. We'll talk about why insurance is needed, the statutory requirements behind some of it, and the compliance and protections that are offered by insurance. And then we'll get specifically into some specific insurance types to include general liability, auto liability, umbrella liability, property insurance, and workers' compensation. So why is insurance needed? So in some situations, insurance is required by statutory law. And when you think about how commerce moves, how we operate in the commercial community, you cannot do anything if you don't have insurance. Think about planes flying and buses moving and product being transported not only across the country, but globally across the world. Insurance is a critical function for all of that. So not only it could be required statutorily by law, those requirements can differ state by state. In most situations, you have workers' compensation in place for protection for injured workers, and that is mandatory by state. Also, there are state laws that require auto insurance to be in place. So if you're if you have a vehicle fleet, the majority of the states across the country are requiring you to protect your employees and to protect others while you are operating your business, particularly if you're moving product or even if you're driving from work site to work site on a day-to-day basis. From a protection and compliance perspective, insurance is necessary to really protect yourself against any financial or unforeseeable financial loss. We never really think about what could or might happen, but it's those unintended circumstances that happen, or that one accident or that one situation that happens that makes us all realize that we should have had insurance in place. And so the old saying is better to have it and not need it rather than to need it and not have it. So Typically, if you have insurance in place, it helps as a business, helps you protect your financial situation, and protect your balance sheet, protect your personal assets as well, so that if a lawsuit comes as a result of a claim, that you are properly protected, and insurance provides that financial backstop for you. Additionally, some of you may enter into contracts, or a lot of you enter into contracts, and you will always see that there is an insurance clause that is requiring you to provide automobile insurance or liability insurance and workers' comp insurance. And having insurance in place helps you comply with those contractual requirements. The key is to understand what is being specifically asked of you, and creating an insurance program that has the right amount of insurance limits and the right amount of coverage in place to protect and to comply with the contractual requirements. And sometimes, there will be requirements for the interests of others that are in these contracts. So if you're leasing a building, a landlord might ask to be named as a loss payee, or they want to make sure that you have property insurance in place to cover your furniture, fixture, and equipment. Or if you own a building, your lender may require you to have property insurance in place in order to cover the structure, if you have a mortgage out on that building. So the insurance can also be in place to provide that level of compliance for the sake of others, because they do have an insurable interest at stake with some of your assets. Okay, we'll start off with general liability. So general liability covers any claim or lawsuit arising from a claim of bodily injury or property damage that is brought by a third party. So if you, as a company, you must have, during your operation, if you are found to be in a situation where you were negligent, or you had a negligent act or an omission that caused injury or damage to somebody, to a third party, the general liability policy will respond to that. And it covers any product you might create. It covers any service that you might provide, or it can provide any liability that arises out of an operation, or what we call a completed operation. So as you, as contractors, complete a project, and the minute you are done, if there is an injury, or if there is some damage that has arisen as a result of your work, the general liability policy covers that exposure. Another feature of the general liability policy is the coverage for what we call personal or advertising injury. And so let's say that you may have had some commercials, or even through social media, you put something out in the public domain that slanders somebody. And somebody says, well, geez, you hurt my feelings, and I had to have some sort of emotional treatment as a result of that. The personal and advertising injury covers that particular type of exposure. A lot of people don't realize this, but this is one of the fundamental features of a general liability policy, is to cover that personal advertising type injury. So it covers libel, it covers slander, and it also covers any copyright violation as a result of that. But what we see it typically covering is it'll cover any cost for medical expenses. It'll cover claim settlements and jury verdicts, and the defense costs, should you have to have a lawyer in place to defend a lawsuit, if a lawsuit is indeed filed against you for that. Now, what it will not cover are employee injuries. So typically the exclusions are for those things that are covered in a different type of insurance policy. So I have a few examples here. Employee injuries is one. That's reason because you have workers' compensation. It doesn't cover auto accidents because you have commercial auto insurance in place. What it The other extensions are, it doesn't cover intentional acts. So one thing that a policy will not do is if you intend to cause that injury or you're malicious or wantonly reckless, it will not cover any of those injuries or any of those incidents. It will also not cover any professional errors and omissions. So if you designed something wrong, or there is a fundamental issue with the development of a particular project that, from an architectural perspective, that failed. It does not cover that specifically because there's other insurance in place that will provide that type of coverage. Now, as you look to put this type of coverage in place, the underwriting basis is based on estimated revenues or past revenues for your business, the type of products or service offerings you may have in place so that they can have a good feel, the insurance underwriters can have a good feel of exactly what your product is about. And of course, claims history also plays a part of it. So some of you, if you may have moved from one insurance agent or another insurance broker to another, or you're looking to move coverage from one insurance carrier to another, of course, you will be asked, do you have any claim loss runs? And that goes to historically, have you had any claims and how large those claims have been, or none at all, related to your business activities. The next coverage here is automobile insurance. And so like general liability, it covers claims or lawsuits for bodily injury and property damage brought by third parties, arising out of your negligent operation of a vehicle that you own or you may lease or rent. Auto insurance is one of those types of coverages that are statutorily required within states across the country, with the exception of New Hampshire and Virginia, where those are optional. It covers, like I said, it covers damage or injury from any negligent acts or omission while during the operation of your vehicle. And the coverage also includes what we call first party coverage. That includes theft, vandalism, and repair costs. Now, one of the things that you might hear me interchangeably talk about is first party and third party. And first party is related to your asset or your vehicle, where third party is to a third person, truly a third party. So you'll hear me sometimes during the presentation today, I'll interchangeably go back and forth between the two. But theft and vandalism and repair costs are related to what we call first party exposures because it's your vehicle. So if your car gets stolen or somebody slashes a tire, those types of things are theft and vandalism to your vehicle that are covered by your policy. But on the third party side, it certainly covers the same similar things that the general liability does. Covers medical expenses, it covers claim settlements, jury verdicts, and of course, defense costs. As you're looking to put these policies in place, the underwriting basis for commercial auto can extend to the number of vehicles that you have, the type of vehicle that you have, the age, make, and model of the vehicles, how many drivers you may have, and also, of course, similar to the other coverage, claims history. Claims history is very important so that the underwriters can feel and know what propensity you have to loss or not. Now, umbrella liability is a little bit different. Umbrella liability covers this same type of exposure, bodily injury and property damage from third parties, but the umbrella liability sits over and above a number of different policies. So it can sit on top of the general liability policy, it can sit on top of your auto liability policy. So think of it truly as an umbrella. When it rains, you have an umbrella that protects your entire body. And so the umbrella is intended to protect over and above these couple of policies that you have in place. There are other policies that are in place that could sit under the umbrella as well, but we won't get into those today. But primarily think as your general liability coverage and your auto liability coverage as what we would call primary policies. right? Those policies come first, they pay out first. And so let's say you have $1 million for each and every claim on a limit for those policies. The umbrella policy can sit above that and provide additional coverage over and above that $1 million primary policy that you put in place. So if you have the accident or the claim and the primary limit, whether it's general liability or auto liability, gets exhausted because let's say worst case scenario, let's say it's a fatality and somebody brings a claim for $3 million. Typically, the primary policy would get exhausted if indeed it was, you were liable. The primary policy would be exhausted. And then the next layer above that is your umbrella policy. And so the umbrella policy then would begin coverage once that $1 million policy is exhausted and provide additional coverage limit for that specific claim. Now, the limit for an umbrella policy can vary based on the amount that is deemed necessary to cover your exposure, depending on the type of operation that you have. I've seen umbrella policies as low as 1 million, up to 5 million, and I've seen some as high as 20 or 25 million. And in working in my capacity as a risk manager for large companies, I've typically have had a 25, either a 10 or a $25 million umbrella policy put in place. But it all depends on the type of exposure that your company has. And I would encourage you to talk to your agent or talk to your broker to make sure you have the proper protection in place. Now, over and above your umbrella policy, you can buy additional limits that can cover you to the requisite exposure that you could have should your business have that type of exposure. So in that way, you can create a large enough tower of insurance in order to make sure your business is properly protected.
Vince, can I jump in and ask a question before you leave umbrella?
Sure, yeah.
So, the businesses will have their basic insurance just to cover their day-to-day operations.
Mhm.
When they are awarded a project, and in the contract negotiation, the owner of the project that they're going to work with or work on may require extra things. And I know you're going to talk about some of those.
Mhm.
Can you give an example of why an owner or what type of project an owner would request umbrella insurance? So if they're asking for $2 million general liability and they're asking for 500,000 auto, and they're asking for workers' comp 500, 100, and then ask for umbrella, what type of project do you have examples of that an owner would ask for that additional level of insurance? Because that umbrella, if I understand it, is pretty pricey.
Yeah, it can be. It very well could be. And it really depends on the type of exposure. So depending on the complexity of the project, the duration of the project, the size of the project, an owner can ask, several things. They can want to make sure that bringing a contractor onto the job can have the right limits in place in order to protect against the catastrophic situation, right? And in those situations, you think about the number of different contractors that are on a job site, the exposure to the public. Think of the scenario where you're working on a job site and something falls from that job site and kills a passerby. Somebody just walking past the job site on the sidewalk. Certainly not intended, but had not for that incident occurring, that person would still be alive. And so when we look at today and we look at the judicious nature that we have in the United States and the jury verdicts that are coming out, we're seeing runaway verdicts, we're seeing verdicts at 10, 15, $20 million. I've seen a jury verdict as high as 40 million, and that's not including the punitive damages that are on top of that. So project owners now want to make sure that the contractors that they bring on site have enough insurance to guard against the catastrophic situation. So one would have to think about the type of job or the type of project that is occurring that would require these types of limits. But it's, construction is a very, very risky industry. And with that type of risk, I think project owners are being much more conservative and are looking to make sure that their contractors have the requisite insurance limit in place in order to protect against those risks. They're always going to ask for the auto, the general liability, and the workers' comp. They're always going to ask for that. So, know that that's a standard, but the thing to look out for is the limit for the umbrella liability and whether or not they're going to ask to be named as an additional insured, right? The additional insured offers the project owner to be named as an insured and have direct access to your policy as if they were an insured, okay? The key to that is a lot of people put that in the contract, but they don't necessarily know, or contractors really don't know what that means. Mm-hmm. So if you were not involved in an accident or you had nothing to do with it, but the lawsuit gets named, the lawsuit comes and it requires the project owner to be named as the insured, then the project owner has direct access. He can file a claim directly against your insurance policy without even telling you. It affords him the same rights as the policy as you as an insured. Acts exactly the same. What I find is that what we don't pay attention to is the indemnification clause that's in the same contract. And so what you want to do is limit your indemnification to the extent in which you were negligent. So you can only provide the additional insured if you were deemed to be negligent. And that's what you want. Mm-hmm. You don't want it for anything else other than that. So I've negotiated many contracts, a lot of construction contracts and a lot of different types of contracts. And the indemnification is always the most important part to protect yourself against taking on an additional, the additional obligation of naming the project owner as an additional insured if you were not negligent.
Mm-hmm. So I have one more question.
Sure.
So I mentioned that umbrella insurance is pretty pricey, mm-hmm. and it's, from what I understand, it is common practice for the agent who's working with us, our insurance agent, to give us a pricing for what that limit of umbrellas. Let's say it's $5 million.
Say $5 million.
So that we can include that in our pricing, yep. as our overhead, mm-hmm. right?
Yep.
What are some key indicators to the cost of that umbrella insurance? Is it length of time that you have to carry the insurance? Is it the industry specific that they're in? Are there some variables that determine the cost of what that umbrella would be?
It's difficult to say, right? Because the underwriters have their own way of pricing all of that out. A lot of it has to do really with what your true exposure is and what is your responsibility and obligation within the project and what type of risk that carries. So remember, the insurance is in place to protect against the risk. They also, you're also going to want to know, one of the things to do is to make sure that you position yourself and you position your company as a very safe operation, right? Safety is key. Your safety practices and different things that you have related to safety initiatives, whether it's worker safety or operational safety, how you go about your projects and protecting your company's interest and the interests of the public while you're doing that, what type of policies and procedures you have in place with respect to keeping your work operation safe. And providing that information to your broker or to your agent so you can position yourself as the best risk. there isn't any true calculation that somebody's going to come up with that is, that I can tell you what your pricing for a particular umbrella policy might be. That's all done internally, that me as that me in our capacity, we won't see, right? What we try to do at Partners is position our clients in the best light possible by using risk management as a way to show how we can help you reduce your exposure to position you as a better risk to the underwriters. So it's different than, like automobile liability. It's a vehicle rate times the type of vehicle that you have. For workers' comp, it's rate times payroll. When you get into general liability and umbrella liability, it's a bit different.
Mm-hmm.
So there isn't any clear math or some sort of calculation that I can sit here and tell you A times B will equal your premium. It's more, how should I say it? It's a different art, I would say, a bit more subjective from an underwriting perspective, really based on the type of risk and how are you protecting yourself from risk.
Mm-hmm. Thank you. So my takeaway from that is get that pricing early, have a safety plan to try to keep the cost down and include that cost in your bid as part of your overhead. Thank you.
Yeah, and early is key because the markets these days are very, very slow to turn around quotes. Sometimes they won't turn quotes until 30 days prior to it being put in place. Particularly on renewals. If you have a program that is an annual program year to year and you have to renew it, the markets this is a very, very difficult insurance market. It has been for the last several years. And unfortunately, we're not seeing it slowing down.
Mm-hmm. Okay. Thank you.
Okay. Let me get back to the presentation here. Sorry, I'm trying to get it back up on my screen. Okay, so do you see the property insurance slide up now? Has it moved?
Yes, it did.
Okay, great. All right, the next insurance type is property insurance. And property insurance, it covers the physical damage to any of the assets that you own or have the responsibility from leasing from certain perils. And those perils could be fire, flood, windstorm, earthquake, vandalism. So it covers any building that you own. It covers any building or asset that you may lease. It also covers furniture, fixture, and equipment. It covers your supplies. It covers your inventory. So say you had a situation where you had a small fire and it burned some of your inventory and your supplies. And so that would typically be covered under your property insurance policy. So think about it as, you have homeowners insurance that insures your home. You have property insurance that insures your property for your business. And, from a compliance perspective or a requirement perspective, a landlord or a lender, landlord if you're leasing the building, a lender if you have a mortgage on a building, you'll see clauses in your mortgage agreements or in your leases that will say that they will require you to have property insurance on a replacement cost basis. So replacement cost means that whatever the cost is to replace that particular asset or to rebuild your building, it's covered on that basis and it's paid for by the insurance company. And an extension of property insurance also includes business interruption. So if you were unable to continue your business for a period of time until such time your business is repaired or it was fixed and you were able to, buy new equipment and get back up and running, it covers the resulting loss of income as a result of that as well. So things that it does not cover, it doesn't cover any property in transit. So if you were in the business of moving goods from one city to another, or to one state to another, it does not cover that. It doesn't cover the employee theft. It does not cover equipment breakdown. So those are some of the small, there's a bunch of other things that that property insurance doesn't cover, but those are the major pieces that where we're seeing some exclusions. But from a property insurance perspective, the underwriters will focus on what's your total insured value. And the total insured value is the replacement cost of all of your assets. And it may include maybe 6 months of what we would call business interruption. What is your business interruption value for 6 months? So if you were out of business for 6 months as a result of a loss, what does that 6 month in lost revenue to you look like? And so there are worksheets and other things that the insurance company will have you complete in order to get there. And you'd have to look at your balance sheets and your P&Ls in order to complete that. Workers' compensation. I'm sure workers' compensation is probably everybody's favorite topic. I say that kind of tongue in cheek because that's probably one of the most complicated lines of coverage, with so many moving pieces and so many different things to understand. And some of it can be fairly confusing. But workers' compensation is a statutory coverage, so it's required by most of the states across the country that cover any injury or illness to your employees while they're in the course and scope of their employment. So, like I said, most of the states across the country require it, with the exception of South Dakota and Texas. But even in those states, the employer is still specifically required to cover those expenses. So those expenses typically include any medical treatment or medical bills that you incur, and any lost wages that an employee incurs while he or she is out of work. Typically, the lost wages are covered at a certain percentage, and that percentage varies by each state. Typically, we either see 66% or 75% in some of those states. It's not 100%. As an additional part of the coverage, if there's an unfortunate situation where an employee fortunately suffers a death while they're in the course and scope of the employment, there is a death benefit for the families that takes care of funeral expenses, and there is some other coverages related to for the families, whether it's job training or for education for children, and other things that could be a part of that. And those death benefits as well differ by state, but each state has a statutory requirement that provides either what the specific wage rate is, that's covered by the percent of the wage rate, and the type of death benefit that is provided to the deceased family members.
So I have a question.
Sure thing.
I'm full of them today.
No, that's okay. That's why I'm here.
There's been a lot of conversation. I'll have business owners who will approach me often and will say, I do not have any employees. I own my own company. I'm the sole employer or sole employee. Why do I have to have workers' comp insurance if I'm trying to secure a contract? And then the second question is, can you explain what the term that I've heard that I don't really understand, these ghost policies?
Ghost policies. Ooh, I haven't even heard of ghost policies.
Oh, really?
But what I'm thinking you're referring to is with respect to the ghost policy, that there are some companies that are called PEOs. They're personnel employment companies, where one can go to. So take maybe a contractor that really might have trouble finding coverage. They can go to a PEO and get coverage through a PEO, and they appear to be as an employed company through the PEO, right? I think that might be what you're referring to. maybe just in a different sense. I've never heard it referred to as ghost policies, but I think it's a different way to go about a company trying to get workers' comp insurance through a program that is typically fronted by another company.
If I may interject, Van.
Yep.
So what she's referring to, there are situations where only the owner is covered under workman's comp and not his employees. And so we see that quite a bit here in the construction world.
Yeah.
Okay.
Only the owner is covered and not the employees. And so if there's an issue with one of the employees on the job site, they're not covered because that particular policy is only covering, and it just
the owner.
Only covering the owner.
Wow.
And when we look at it, as owners,
Uh-huh.
we don't know that that's the case.
Wow. Yeah, I would say that might not be the appropriate thing to do. Because you really put your employees at risk if an owner then is only fronting coverage for him or herself, and there is no coverage specifically for the employees. That very well could be a violation. In the company.
So in some of those cases, those employees are really 1099.
Okay, contracted employees. Okay, well, if they're contracted employees, then that might be different. If they're paying them on 1099s, they're not on the company's payroll. Mm-hmm. So now, as we're talking about it, it makes it a little bit more sense. The owner, if the owner needs the coverage to required to comply with the statute, the contractual requirement, and if the employees are truly contractors paying them on 1099s, they're not employees, quote unquote.
That's right.
Right.
So some of our clients have had trouble actually acquiring a workers' comp policy because it is just the owner of the company, and they have no employees. So sometimes they have a hard time acquiring a policy, and then acquiring the policy at the limits that the potential client that they are trying to work with is requiring.
Right. So is the requirement it's the statutory comp plus it's the employer's liability, right?
That's correct.
Okay.
That's correct.
I got you.
And so how does a company, well, we haven't been very successful in negotiating that with an owner. So if we have an owner who, let's say, is renovating a big building or something, and it is an absolute no conversation on whether you have all of these insurance requirements. One of the barriers that we have, particularly for smaller businesses that are still growing, is trying to understand what type of, how to get that workers' comp, which is where that ghost policy, you called it something else, but that's where that ghost policy came into play.
Oh, okay.
Mm-hmm.
I got you. Yeah, I have seen that happen in a different sense, right? Through a PEO. But it really depends on, the agent and the, what agent they're going to and what access an agent has to the specific market, so not sure, I can't sit here and say that that 100% of the time that an agent will nail it and get it right, but it really depends on the type of agency they're dealing with and what market access do they have in order to help facilitate getting that policy in place. Typically for smaller companies, it could be a challenge, but we do find that there are markets that are out there that will write the exposure. I believe the requirement in North Carolina, if I believe I'm right, is 4 employees.
Have to have 4 employees, and
right? Have the state
you're absolutely right. Mm-hmm.
Right. So that, I'm from Florida, so I'm still doing my research in North Carolina. Certainly I think there's if folks are struggling with getting a policy put in place, then they need to just shop their agent.
Mm-hmm. Okay.
Yeah, it really depends on the market access and what type of access points that an agent may have or a broker may have. It can be done.
Okay. Are you familiar, do you work with OSIP or owner-controlled insurance programs? Is that
We do-
something?
Yeah, I've done some before. We've done a
Okay.
lot of, here at Partners, we've done a lot of builders risks programs, and we haven't done an OSIP, but I have done OSIPs before in the past.
Okay, okay.
Yep.
Thank you.
But
I'm not-
we will be doing OSIPs as well.
I apologize. I'm not sure how much time we have, but I'm asking questions as I'm thinking of them because these are things that have come about and have proven to be true concerns for some of our contractors.
Yeah.
Sure.
As we expound on the insurance and only having the workman's comp for the owner, because if the scenario is that he doesn't necessarily have over 3 employees and it's not necessarily required,
Mhm.
and he has all these additional subcontractors,
Mhm.
you expound on the requirement of making sure that you have the workman's comp policies in place for those subcontractors and what the ramifications could be if you don't have them?
Yeah, this would then be, you think about the requirements that are then passed on to you as a contractor. Now you're hiring subs, so now you need to make sure that the subs have the same type of coverage that was expected of you, right? So it's going to be critically important to make sure that as you're contracting with these subs, to have the workers' comp policies in place. And also to name you to have put in the contract a waiver of subrogation, right? So subrogation is a theory of recovering for an accident where another party is at or could be deemed at fault. So you want to make sure that you have the workers' comp requirement in place with waiver of subrogation. But if you don't have that coverage in place, you or your sub or the sub can be specifically responsible financially for the injury that is caused to a specific employee. Everything comes back to having the financial protection. In addition, if a sub does not have the coverage or you don't have the coverage, you could be in violation of the statute, of a workers' comp statute, state workers' comp statute. So this is all intended for you as a contractor to avoid risk, to avoid those unforeseen financial circumstances that could impact your business or can wreck your business.
Okay.
So by not doing it, by avoiding it, you cause a larger financial issue than if you spent the money to put the coverage in place or to assure that the coverage was in place for your subs.
Okay.
Does that answer the question, Rochelle?
Yes, absolutely. Thank you so much.
Okay, you're welcome. Okay. I'm not sure how much time we have left, but we'll just keep this rolling. One of the most confusing pieces of workers' comp is the mod rate. And I know this has come up as one of the hot button questions, but I'll try to explain the mod rate as simple as possible. It's very difficult to understand. And even in my early days, I had a hard time understanding it. But the mod rate is used to determine your specific premium based on your loss history and payroll as compared by others in your class of business. So, think about construction business, but within construction, you'd have plumbing, you'll have electrical, you could have iron workers, you can have a whole bunch of different things. So how do you be in the same industry class and think of one class that has a higher risk than another? But the mod rate gets to a point where it gets granular enough to look at your claims experience based on your payroll to then understand, is your company performing better than average than the other industries, the other companies that are in your industry group or your class code group, right? So the class code, there's thousands of different what we call class codes, and it all ties back to workers' compensation and ratings for workers' compensation. So each separate class code has a specific rating that is used by multiplying it against a company's payroll amount in order to get to the premium. What the mod rate does is take a history of your claims over a certain period of time and compares it to the average of your specific class, industry class, and determines if your 3-year average is higher or lower. If it's lower, it reduces your premium. If it's higher, it increases your premium. So the baseline of it, and here's an example of it here at the bottom. If you have $100,000 premium and your mod rate is 0.75, and typically let's call it the average. The average, in baseball, they call it the Mendoza line, right? So I'm sorry, I'm a baseball player. So, but let's call the horizon for that as 1. It's called the unity factor. So that's where everybody starts at. It starts at 1. If your mod factor is 0.75, that means you're performing better and it reduces your premium, right? So you can see the calculation here. So it takes 0.775 and multiplies it by 100,000. If 100,000 was your premium, and then you get your modified premium at $75,000. So you're performing better. So you know what? That's great. You should have a reduction in your premium. And look at the last example. If your mod rate is 1.25, which means you're 25% higher than the average, then your premium, if your premium was 100,000, you apply the mod rate factor, then your premium comes out to be 125,000. So it really makes the premium that you're getting quoted, it normalizes it against what's happening in your industry class, and then takes your history, your claim history, and it adjusts it higher or lower based on how your losses are occurring, or if you have losses or not, against the average. Now, yep.
No, go ahead. I'm gonna let you get through that, and then want to make a very important statement about this EMR rate.
Sure, yeah. So everybody asks, well, geez, what can I do to reduce my mod? And it really has everything to do with how do you keep your workers safe? How do you provide a safe work environment? How are you avoiding accidents? Assessing your risks, assessing your business risk and your operational risk, and identifying what are the things that have driven claims in the past. Me as a risk manager, this is what I did all day long. And so taking the opportunity to make sure that we look at how do we assess the risk? What are the things we need to do to mitigate your risk in your opportunity for loss and drive that down? The best thing that you can do is have a safety program in place, drive accountability with your employees to make sure that safety is everybody's responsibility, and have written policies and procedures in place that address safety prevention that will help you reduce your exposure to loss. Now, I'm not sure, this is pretty much the end of the presentation, but I know that, was it Rochelle or Vernetta that wanted to say something?
Yeah.
Just
I did. This is Vernetta. Yes. So the many years that we have worked in construction and services industry, working with clients, when clients think about risk, and particularly if you're in the construction industry somehow, some way, clients think about risk and they do everything possible to minimize their risk and the owner's risk as much as absolutely possible.
Mhm.
And so sometimes it may seem, and sometimes it is, they over request or they ask for more than what they may really need.
Mhm.
But you know, like the umbrella insurance sometimes is excessive,
Mhm.
or the criteria that they set for the EMR, et cetera. One thing that we've learned over the years is that you really just have to be ready. If it is an industry standard that owners, contractors, construction managers are going to really be evaluating companies based on if they're risk adverse, right? That EMR is 1 or below.
Mhm.
That really has a better that company really has a better position of being able to win a contract. All other things equal,
Mhm.
that EMR rating is something that owners and construction managers, general contractors really pay a lot of attention to. And I have seen companies who are fantastic at what they do, but have slacked a little bit on the safety, or had somebody stump their toe and filed a workers' comp claim. And so their EMR rate was above 1 and really were not awarded the contract because it's just too risky. And we
Yeah.
all know construction is a risky industry anyway.
Yeah.
So I say all of that to say that thank you for earlier talking about the importance of having a safety plan, a safety program, safety training. Even for us, I mean, we are consultants. We're not out there swinging hammers,
Mhm.
but still, it's important for our team because we're on the job site, et cetera, to have those safety procedures in place. And I cannot emphasize that enough, because when it comes time for the company to submit their pre-qualification, one of the very first things they're going to look for is that EMR rate.
Right.
So I just want to emphasize how important that is to have in place
Right.
and have a good one.
Right. Right. And it's critically important. Like I said, we at Partners, we're in the risk management business, where we're experts at helping those identify and understand risk, and helping really helping putting those types of plans in place. I've done that the majority of my career for companies that I've worked for. And one of the companies I worked for was one of the largest construction companies in the world. But it's the safety culture is something that's critically important. And larger contractors, larger project owners are going to look at making sure that safety is paramount. It's not something that's optional. It's not optional. It really isn't. And they're going to choose those firms that have a strong safety program in place.
Mhm.
Can't
Are there
emphasize
any
that.
questions from the audience? Rochelle and I have been asking most questions. So we get these questions from many of you, and then we're having to try to go seek and find those answers. So we wanted to see if anyone has any questions that they'd like to bring up. There was a question that I put in chat earlier that another question that we receive from firms at times is, I don't have a vehicle that is in my company's name, that is owned by my company. I drive it to the train station and I catch a train to the job site. Do I and must I still have commercial auto insurance?
Well, that's where you negotiate. Some of these contracts is where you can have some negotiation too. There's some common sense in a lot of stuff that needs to happen. And if you don't have a vehicle, then why require it? I've negotiated many contracts where it was the same thing. There's some of these contracts they're boilerplate contracts, right? And language is already loaded into it. And it's up to you to come back to say, well, I don't have this exposure. Why do I need to carry it? If I'm driving to the train station and dropping it there and then taking, public transportation to the job site, then you have the risk doesn't exist.
That's exactly right.
Yeah.
And yeah, we have been in those rooms talking with corporate risk management officials saying, this doesn't make sense. What's the risk to you?
What's the risk?
Automobile that doesn't exist.
Right. And then sometimes you have to wonder whether or not the corporate risk managers understand the risk. Trust me, I know my peers in the industry, right? And I've seen that a lot. I've had a lot of battles with different risk managers talking about insurance requirements that don't make sense.
That's right. So we have a hand up from Lacenta. Did I say that correctly?
Yes. I did have a question.
Please, go ahead.
Yeah, sorry about that. I guess I turned my camera on. It's a little dark in here. Okay. I guess my question is, with the general liability, do you all require it to be based on our annual revenue as well? Like, is that consistent across the board? So that'll be
Yes, it's very, very consistent. General liability, one of the underwriting basis is revenue. So you will see that as an ask. They will either want, current revenue, or if you're, say you're a startup company, they may want 2 to 3 years of performance of what they think you're going to do. So they want to see whether or not your business is going to grow, whether your exposures are going to change over time.
Okay, thank you.
You are welcome.
Good question. Any other questions? We did mention earlier another comment or another business practice for sure is ensuring that in the quotes, proposals, bids that are created for a project include the cost of their insurance for that project in their overhead. And a lot of companies miss that, right? But it is a cost that can be included, should be, not could, should definitely be included in your pricing, because if you have to pay for the additional insured is an extra cost. If you need an umbrella, it's also an extra cost. And then just the cost of carrying your regular business insurance. So when you're putting together your quotes, please do not forget to include that in your quote so that you can cover the cost of that insurance on that project.
Hey, Vernetta, that raises an interesting point. So if you're contacted by a prime contractor who wants to use you as a sub on a contract, sometimes they don't share with you in that initial conversation or before you actually put your numbers together what the insurance requirements might be. And so you may provide them a quote and not actually have included the cost of the additional insurance until they win the contract, and then you get a subcontractor agreement that says, okay, you need to have this amount of insurance.
That's a great point, Will. And so our response to that is know the documents. If you are going to work or bid as a subcontractor, subconsultant, you should absolutely be reading the entire specs. You
Right.
should know what those requirements are. Often, and it is in a very unfortunate position to be in, but too often, firms only focus on that one scope that they're going to do. They're either going to, whatever it is, drywall, concrete, whatever. And then they think about all of the things that they need. But then when that first tier contractor wins that project and they pass all that risk down, and then it's too late to renegotiate your cost.
Right.
So as a subcontractor or as a business owner, period, if I'm going to assume any cost or any risk, I need to know all the specs. Yeah, I can look at the concrete spec, but I need to know that those front end documents as well, because first tier contractors are going to require you to have the same level of insurance that they're required to have. You need to understand that. So you can't go without reading the front end documents and understanding what your cost will be if you win that project.
Right, absolutely. Dr. Bannister has his hand
Yes.
raised.
Hi, good evening, everyone. So I heard someone ask the question in regards to the workers' comp, but I kind of got slightly distracted with my child, so I had to run away. So I would like to ask if you can just go back over the part where you're the owner of the business, the only employee, but you're asking for workers' comp. I was told, because I had, like, for instance, I have a business registered in the state of New York and then here in North Carolina. I was told that if you're the owner and the only person working, that you technically don't need the workers' comp. But then at the same time, so it's like, when you call, one agent will say, oh yeah, you need workers' comp, even though you're the owner and the only worker. Then another agent will say, oh no, you don't need it, even though you're both. So could you clarify that a little bit? I put them away so I can focus.
Yeah, I mean, technically by the law, depending on what state you're in, you have to know what you need to know what is the minimum number of employees that is required for you to comply with state statute, right? We were talking about North Carolina and it's 4. So in that sense, technically you don't need comp coverage, right? We were talking about, and I'm trying to think through the scenario that we were talking about earlier. But if there are no other, if you're not hiring subcontractors, or if you are hiring subcontractors,
If you're
1099
employees,
if they're 1099s, you need to make sure that your subcontractors, employees by contract, have and are required to provide a workers' comp insurance. If they have more than 4, of course.
I don't need.
You wouldn't need.
Okay. Because I had gotten a $15,000 fine for it.
well, and see, that's the problem that we're having in the industry, and really don't know how to address it. And we have tried. The insurance requirements come down from a company's risk manager, right? And we've even spoken with the companies, the corporate risk managers, to say North Carolina doesn't require someone to have workers' comp if it's just that one employee. And so, but they just will not budge. That's where someone will go and get that ghost policy just to have that insurance, because otherwise they're not awarding you the project.
Right. So you're better off. Yeah, in that sense, you're better off getting the policy and putting a policy in place that protects your interests. It puts you in a position.
They will not budge. They will not listen. They don't care about the law. It's they can require it. And so we have, that's where we learned that from, is because we were really trying to figure out, we had many companies that did not have 4 or more employees. They had employees, but they did not have 4 or more. required by state law to carry workers' comp. And so we figured that out and we're able to get them some projects awarded, but it becomes difficult trying to break through risk managers
Yeah.
to understand what the true risk is.
Yeah, some of them are very strict. They want it's in their contract and they'll stick by it. But then you know, me and the capacity that I was in with prior employers and the risk management capacity, I always tried to find the right way that was reasonable. And sometimes you might not come across that person.
Mhm.
Thank you.
Most
Thank you.
I want to apologize for coming in late, but can you please revisit the ghost policies? I had a meeting and I wanted to, if you would please just give me a little bit more insight because I'm looking at doing something and I heard ghosts and I heard policy and four and no, I knew about the four, but when you said that some of these contracts are still making you do it, I need to make sure I don't have that $15,000 fine.
Yeah, well, I'll tell you, it seems like Renetta knows a little bit more about those ghost policies than I do.
Renetta, Queen, if you would please be so kind as to grace us with your presence one more time.
Well, Gwen, you called it something else though.
Yeah,
well,
that's what we call it in the construction world in our space.
Yeah.
So that may not necessarily be what it's
What it's
actually.
truly
there are these personal employment companies. They're called PEOs, right? And you can go to a PEO and get coverage under a PEO. They're an entity that's put in place to essentially front that type of coverage, right? And so if you're able to do that, that covers the, you know, it covers the opportunity for you to get the comp coverage. But I would still figure out a way to avoid the PEO and figure out, you know, just go try to find an agent that can help you put a policy in place.
Mhm.
You know, you want to make sure that you provide as much transparency as possible to your operation and to your business.
That's right.
Thank you very much. And you were specifically speaking of workers' comp at this time, not the business insurance. Have you gone over that? Just a quick overview because I'm just trying to get a cliff notes.
All of the coverages. Yep.
Hey, Bettina, we've got the presentation recorded. I'll make sure everyone gets a copy of it afterwards, okay?
Amazing. Thank you so much. I'll mute.
Thank you for joining. Absolutely. Any other questions? We have a few more minutes.
Well, I do have a question. What was the biggest aha other than the PEO coverage and the ghost policies that the construction people are familiar with? They're like, we're going to call these the ghosts. Boo-hoo. What was any other aha that we received from tonight that we want to look at when dealing with construction, maybe for the state, when you're maybe subcontracting out, something that we may overlook that we don't see or that we need to know?
I would say it's the additional insured requirement, right? So in some instances, you might be required to name a project owner as an additional insured. And this is me just putting my risk management hat back on. You want to limit the additional insured requirement only to those claims or only to those matters for which you are negligent, right? So there's specific language that I've crafted before in the past that I put in contracts that helps tie the indemnification requirement, tie the additional insured requirement specifically to the indemnification, because in the indemnification, you're only required to indemnify the project owner for those situations or those claims for which you are negligent. You want to do the same thing with the additional insured requirement. Because if you don't do that, you open yourself up and you open your policy up to any particular claim that even if you're not at fault and, you know, the project owner gets named in a lawsuit or whatever, they could just file it on your policy.
Oh, that was a gem.
All right.
Let me just add to that question. So if you add on a company as an additional insured for, let's say, a 5-month project, right? How important is it to, after that project is complete and you've completed your scope, how important is it to go back to your insurance carrier to have that company removed as an additional insured?
Great question.
I don't know if you can specifically, well, on a master policy, the problem is that you've got the tail risk. So think through the completed operations, right? The GL policy has completed operations covered. So if there's something that you've done and you walk off the job and you're done, you wash your hands of it, you're free. 6 months later, a claim happens related specifically to your work. They file the claim against the project owner. Project owner could come back and say, hey, well, Will, your company did, you know, the work here. We're just going to go ahead and file the claim on policy. I wouldn't take them off.
And sometimes contract will state that you have to carry that insurance for X number of years after the CO, the certificate of occupancy on a project.
Right. Now, what you want to remember is in North Carolina, the statute of repose is 6 years. So somebody has 6 years to make a claim for any bodily injury, property damage that has occurred as a result of your work.
Okay.
So when we're on the procurements, we need to include that 6-year premium in that. Is that what I'm hearing?
No, your premium is an annual premium. It's not 6 years. You won't get a multi-year premium.
Right, it's 1 year. It's 1 year, but what I'm hearing from you, since they have that 6-year repose and to protect our assets, get it? We want to be able to say 5 years from now, if something were to happen, should that not be an inclusion? So that's not something that would come out of our pocket later down the road, because I'm hearing on some of the procurements that some people have done, and I know this is business insurance, but I want to make sure that I specify and cause consideration to come to this, that if something were to happen, that additional funding can be added with a guesstimation of what that annual premium would be, so that we can cover whoever that subcontractor would be that we're working with.
Yeah, you could certainly think through what the future expense could be based on what your current expense is, and include that as part of your cost, because you want to be able to keep that policy in place and, you know, keep it continuous for the next 4, 5, 6 years.
Mm-hmm.
Thank you.
You're welcome.
Well, thank you everyone so much. Vin, thank you so much to you and your team, Michael Dean, and I forgot the other young lady's name that was on your team.
Davis.
Thank you. Thank you. We really appreciate it. Don't leave us yet. We do want to also invite you and just inform you about the 2 additional workshops that we have coming up. So we have the Hub certification workshop that's coming up on September 26th. That is also virtual. If you are not Hub certified with the state of North Carolina, please do so. There are so many opportunities to having that Hub certification. And as we, TRS and I is working with with part of the bond management team for outreach and engagement of minority women-owned businesses to compete on those multitude of contracts that are coming out over the next 10 years. That Hub certification is going to be one of the key factors that we look for, because we do want to make sure that your participation counts toward the economic impact of the Guilford County area. So the Hub certification workshop is coming up on September 26th. And then the next workshop that is coming up is part 2 of a bonding class on September 27th. And register for that class as well. If you are a firm and you have a line of business in which you are required to have a payment and performance bond, this class is for you. It is a long time. It is an arduous process to receive a bond, a payment and performance bond. So do not wait until it's time for you to bid on an opportunity to determine that you need a bond. Start now. Start now. So we encourage you to participate in this class as well, and we look forward to seeing you there. I am going to see if president of our company, Rochelle Latimer, has any closing words.